9, 8, 7, 6, 5, 4, 3, 2.
Hello, Wilberforce here, founder of Power of Mindset Youths. Happy Sunday, guys. And now we are going to the stock market. For those of you who have ever been interested in the stock market or wish to invest in the stock market, then this video is for you. There are thousands, if not millions, of companies out there, but one question that remains the face of traders and investors interested in the stock market is, how do I choose which company to invest in? If you are here and have been having the same question, then this video is for you. Let's go. So we shall use one tool that will give us 5 metrics to evaluate and find a company worth investing in. Let's go. It's called Forecaster, and this is the website. If you do not have any idea of a company that you would wish to, for example, evaluate and probably invest in, then you can come here the top right corner on the dotted box and click on the rankings page, because this rankings page is going to show you different companies according to the 3 categories. Number 1, the indexes, or the world or global indices you may or may not have heard of. For example, we have the S&P 500, the Nasdaq, Dow Jones Industrial Average, S&P Mid-Cap 400 Index, Russell 2000, and the rest are according to different countries. Those in Latin America, in Asia, in Europe. You can see all of these are indices, and you can just click on each of them to see if you are interested in any or the companies within each of these indices. You can also look at companies in different sectors. For example, companies, the basic materials, communication services, consumer cyclical, consumer defensive, energy, financial services, healthcare, industrials, etc., real estate, technology. And you can also look at industry or other companies according to their industries. For example, those in communication services, advertising agencies, broadcasting, entertainment, internet content, and information publishing. And also those ones in financial services like banks, financial insurance, investment banking and investment services. Those ones in healthcare, biotechnology, drug manufacturers. Those in real estate, those in consumer defensive and cyclical, etc. So for my case study, I'm going to use NVIDIA, because I know it is one of the largest companies in the world, and it is listed on different indices. For example, it is listed on S&P 500, it is listed on Nasdaq, and many others. So let me come back here. You see, this tool, Forecaster, behaves just like Google. You come here and you can be able to search any instrument of your choice, be in forex, be in crypto, be in the stock market, options, etc. So at the moment I just tap here on the search bar, I can be able to see those ones which are frequently asked or analyzed or evaluated. So in NVIDIA Corporation, before I even type it, it is here listed on Nasdaq. And I want you to come here on FND, which stands for fundamentals. By the way, these other short forms, for example, the first one, SNL, stands for seasonality screener. Then PTN stands for pattern screener. OBS stands for overbought and oversold region. Then FND for fundamentals page or screener. Then PLT, then the news section. So let's go to the fundamentals. You just click there. So this is NVIDIA Corporation, listed on Nasdaq. And you can see you need to select this one, which is fundamentals, as we have done. Then you scroll down. The new tool which I want you to focus on for today's video is the ratios page. We have been having analysis page, we have been having financial statements and transcripts, and now you can get the ratios page, and that's where we're going to get the 5 metrics to help us evaluate and find a company worth investing in. So once you click there, you are going to find 5 tabs under it. That is the valuation, the financial health, solidity, and forward valuation. So let's begin with the first one, which is valuation. But the metric I want you to pick, if you are noting, is the EBITDA. That is enterprise value. EBITDA stands for earnings before interest, tax, depreciation, and amortization. By the way, these icons you are seeing are called descriptors. Once you click on it, you are going to be able to get the explanation of what that feature means. At the same time, if there is a formula, it is going to show you the formula. So for example, EBITDA, the value of the whole business, its equity plus net debt minus compared to its core operating profit before depreciation, because it includes debt. It's fairer for comparing companies with different borrowing, and the formula is here. So this EBITDA, it will be able to show you how much investors pay for the operating profit, and it will also help you to compare a company's performance over time. What I mean, when you look here, you can see this is 2011 up to 2026, so you can see how much investors have been paying over time, and you can realize if this year you are going to pay higher or lower than the previous year. And to also help you to know how the company is performing, if it is attractive or if it is less attractive. Secondly, you can be able to compare companies you want to invest in, because as investors we want to invest in companies or trade companies where the EBITDA is lower. I repeat it, the lower the EBITDA, the better for investors, because you will be paying less for the operating profit. I repeat, is how much you pay every dollar for the operating profit. So in NVIDIA, in our case, this is 2026, you can see it is, you are going to pay 34.01 times the operating profit. Yes, it is the number of times you pay to own that company. Okay, the operating profit. So once you click on this, you will be able to get a chart, and you can see the price chart of NVIDIA, and you can also see the chart for EBITDA. Okay, so you can see it is the EBITDA, it is at 34 as we said, and it is near its all-time lows. Okay, so that would mean it is this price of NVIDIA is likely or has more room to continue rallying up. Much as it was nearing its all-time high, it still has room to go up, and it is not yet too late, because what the company is charging as EBITDA, or how much you are going to pay to own the company as the operating profit, then it is still low at 34. So you can continue looking for different companies. Probably when you click on the S&P 500, you can come here and click for, it is here, S&P 500, and you can look at one of its companies, which is NVIDIA. It is here. You can by the way turn on the ratios, and you can see we are under valuation. And in this S&P 500, we have 500 companies within the index, although as if we have gotten more 3 companies that has joined this index, S&P 500 stock index. So what I was saying, you can look at all these companies, you can filter them according, because you can see all these companies are ranked according from best to worst. So you can also turn on this descriptor to tell you how it works. The filter ranks the companies from best to worst across this groups ratio. And again, you can look at, for example, if I turn on the market cap, you can look at the company with the biggest or the highest market cap. For example, it is Expand Energy Corporation, followed by Impam Systems, etc. If you want to look at the price earnings, that's another metric we shall look at. You will also see the rankings of these companies. But now for our case, we are looking at EBITDA, enterprise value, earnings before interest, tax, and depreciation and amortization. You can see the company that is doing well, which is ranking for you to invest in according to this ratio or metric, is CrowdStrike Holdings, okay, followed by these other companies, Tesla being the fifth one with EBITDA, because you have to pay, like it's here, you have to pay the EBITDA of 143.94. That's, you have to pay 143 times to own the company or shares in this company, and that is the operating profit you'll be paying for. Okay, so let's get back to NVIDIA. In fact, I can also go back from here. By the way, the biggest company with the highest market cap, or the largest one, I think I had mistaken, it is NVIDIA Corporation with 4.68 trillion, followed by Apple, followed by Alphabet Corporation, etc, etc. So if I click on NVIDIA on this arrow icon, it will take me back to NVIDIA. So for example, if a company has an EBITDA of 10, it means investors are paying 10 times the company's operating profit to own it. So coming back here to NVIDIA, the financial tab shows us the next metric, which is return on capital. And I think for all of you investors, you would wish to know how much you get on the every capital you invest in any company, and this is the metric that will show you that. If you click on the descriptor, you can see the after-tax return the company earns on all the money invested in it from both shareholders and lenders. So it shows you how the company is using the capital, the money, to generate a profit and the return to give to its investors. And again, you can also look at the different years, how it has been giving back the value to the capital invested in such a company, like NVIDIA in our case example. So for example, in 2016, the return on capital is 11.68. In 2017, it increased to 28.29. In 2018, it increased to 56.11. Then 2019, it had to fall again to 38.33. The increasing consistent increase in return on capital, which is lowest, shows how better the company has been performing over time. Because look, even if, for example, here in my country, we have what we call a circle. So if you probably buy shares and you have been getting, let's say, $10 as an example, on every share in, for example, 2020, but now in 2026 you get, let's say, $100 on each share. That would show you that the circle you invested in or you bought shares in is doing well and is growing. So NVIDIA, if you can compare, in 2016 it was giving return on capital of 11.68% and currently is giving 74.60%. That's a massive increment. And you can also see as of last year, 2025, it was giving 99.87%. 2026 it is giving 74.94. So that would mean last year it performed way better compared to this year. This year had a slight decline. Okay, and you can click on this highlighted zone or even the chart to open the chart to see exactly what I'm talking about. You see how the chart has been moving in terms of return on capital and also in relative to price. Okay, so this is something worth checking as investors, probably because you want to know how much you get in return on your capital. We go to the third metric, which is under financial health. The major metric you want to get or check is the free cash flow yield. Okay, so if we check on the descriptor, it shows how much spare cash the business generates each year relative to its market value. Yes, the free cash flow yield looks at the entire market value of the company and also looks at how much it generates in cash. So for example, if a company is worth 10 billion and generates 800 million of free cash flow, its yield is 80%. So if we come back to NVIDIA, you can see that NVIDIA current free cash flow yield is 2.13 as of 2026. If you click on the chart, you're going to see exactly what we are talking about. This is the 2.13% in 2026 I'm talking about, and you can see how the price is moving relative to the free cash flow yield. So it also shows the company's healthy status, okay? Because, for example, a company, if it has a lot of let's say a higher market value, but it is not generating a corresponding cash to the company, then something would be wrong. Again, if you see a company with probably like a little or smaller market value that is generating huge amounts of cash, it signals something dangerous, because investors could be selling off their shares to get the return, to get back their cash, simply because they expect that the company may lose a value in the future, okay? A crash probably of such a company. So be vigilant when you see companies with higher free cash flow yield. That metric can also help you to understand the reasons behind.
For example, Visa is having a higher free cash flow yield compared to its competitor MasterCard,
which is sitting at 3.30. So, but you can also compare on the other metrics we have covered. For example, if we look at the financials for MasterCard, let's say the return on capital, so that you see which metric you care much about, you can see that according to TTM, the trading 12-month, the return on capital for MasterCard is 91.21. When we check that of Visa on the financials, under the financial tab, return on capital, and still we check on the TTM, the trading 12-month, return on capital ROIC for Visa is 46.79. So that would mean MasterCard is beating Visa Incorporation when it comes to return on investment. Once again, if we go back to the valuation, you want to compare two competitors to see which one has a competitive edge. You can look at the EBITDA. We are looking at 23.18 for the TTM, the trading 12-month, okay, here. And when we look at that of MasterCard, it's having, let's go back to valuation, and EBITDA, it's here. It's having 22.09. So which is lower? It is MasterCard once again.
Moving over to the fourth metric,
which is solidity. Under solidity, we have three methods. These ones have been existing on Forecaster. Under the analysis page, if you scroll down, they have been all along here, and you can, in your free time, find more information about these ones, especially the four methods we use to calculate the fair value of every company, using, for example, number one, discounted cash flow, economic value added, the Peter Lynch, and the average other EV stroke sellers. So getting back to our ratios page, under solidity, we shall take this metric of Altman Z-Score. So among other scores that has been existing on forecast analysis page, the Altman Z-Score helps avoid value traps or companies at risk of bankruptcy. Thus, it shows you if a company is strong or struggling. Have you heard that? This Altman Z-Score will help you to know if the company you intend to invest in is either struggling or strong. Therefore, a risky company has a Z-score below 2. Above that means the company is safe and is strong. So let's look at what NVIDIA has. NVIDIA has a score of 59.71. If you click on the chart, you can see how the Altman score is performing well. In most cases, when it is below 2, you will find when it is in the red. For example, in 2011, you can see it was at 2.26. Okay, so the higher the Altman score, the better, especially when it is above 2. So the last one, the last metric on the tab of forward valuation is the PEG ratio. If we click on the descriptor, the PE, price earnings, adjusted for how fast earnings are expected to grow. So cheap but stagnant and price but fast growing companies can be compared. Around 1 is often seen as fair. If it's left blank when the company isn't profitable or isn't growing. It's left blank when the company isn't profitable or isn't growing. So the PEG, which is the price earnings to growth, compares the earnings, the actual earnings of the company to future growth expectations. And therefore, as investors, you would wish to know what analysts are saying, if the company is likely to grow or not. If it is 1, it's fair, but if it is blank, then it signals something dangerous about the company, and that actually means that the company is not growing. So for the case of NVIDIA, as our case example, is at 2. So those are the 5 metrics I wanted to share. And we also have this indicator legend that explains almost everything. P, price earnings, market cap. You see PS, price versus sales. Okay. The enterprise value, it shows you, and the lower the better. It also shows you what is better and what is worse, so that you can know how to interpret each and everything. So if you have any questions, leave them in the comment section. Please subscribe for more videos. Like it, please, because my statistics are showing me that 92.1 of those of you who watch my videos do not actually subscribe. Only 7.5% have subscribed. So kindly do me a favor, and when you watch or come across my channel, hit that subscribe button. It takes nothing from you but gratitude to appreciate my work and continue bringing more for you. Again, I thank you all Meros who are watching my videos, because I see 90.6 Meros, and I appreciate the 9.4 of females who are watching my videos. And once again, a quick and a loud applause to Kenyans, because you are showing me 41% of you watching my videos are from Kenya, followed by my countrymates from Uganda with 2.2, then South Africa, a big applause to 1.1, and then Nigeria of 0.8. Otherwise, wish you nothing but the best. Nice weekend until we meet next week. Goodbye.